good afternoon. You've tuned into MFCon or on CNBC TV 18. I'm Vinny Motiwala. With me is my colleague Sonal Gutra as always. Sonal, good afternoon to you. And we have so much that happens in the industry. I think that's what we're going to be focusing on today.
Exactly that. And we have a special guest to do that with us today and talk about the mutual fund industry, the trends that we are seeing. The guest today that we have on the show is Mr. Venkat Chalasni, who's the Chief Executive Officer at AMFI, the Association of Mutual Fund Industry. And we are going to be speaking about the industry trends, the outlook, distributors, and a lot more, how more concentration or how more distribution can happen for mutual fund products at a lower level. Thank you so much for joining us today, Mr. Chalasni. And there's so much to talk about with you. We did get the AMFI data as well recently. And from that, we did see some data come by. On that, I wanted to understand more about what B-30 cities are doing now. That is one space where AMFI also is looking at increasing distribution. Right now, what's the contribution to the total AUM? The last known number was just about 15 to 18%. What are the plans to increase this proportion?
Yeah, thank you for having me on the show. You have taken a very important point as we speak now. The B-30 cities contribute around 15.35 lakh crores out of the total AUM of 80 lakh crores. And that brings the percentage to around 16 to 17%. But having said that, we need to do a comparison. Let me put two data points for you to look at the B-30 city contribution. One, the amount that we're talking about is coming from the individuals, while the total AUM that we talk about, 80.3 lakh crores that is there, it is both from individuals and non-individuals. So it's always good to have a better comparison between the B-30 individuals versus T-30 individuals, where if you take that as a percentage, as we speak now, the percentage comes out to something like 28%. That is one important data point. The second data point that I would like to also mention here is that if you look at the SIP contributions, you would have seen, I'm sure you would have tracked the data as on December, we had a record SIP inflows, which is around 31,000 crores. Out of this, 40% of this SIP contribution is coming again from B-30 cities. So we have seen an improvement in the contributions that are being made from the B-30 cities when compared to the previous period. But having said that, we are, as you rightly mentioned, there is an effort being made both by the regulators and by AMFI to ensure that the number of investors increase in the B-30 cities. The first and foremost, from the regulator side, you would have seen that they have given the incentive structure. They have said that any new investor that is going to come from B-30 cities, either in the form of investment in the form of lump sum or in the form of SIP, they would be given, the distributor will be given a compensation to the extent of 1% over and above the usual commission they get, but of course subject to a maximum of 2,000 rupees. This is an incentive structure that they have provided. The second important thing that we are trying to do is we are trying to increase the feet on the street. You know, the number of distributors are very less when compared to the other industry. If you're comparing with the insurance and others, our number of the feet on the street is very less. So we have trying to increase the numbers. One, you would have seen recently we have entered into a tie-up with the Department of Post, where they have an extensive network, almost around 450,000 employees are there. We entered into an MOU with them. We are trying to train them, then make them write the NISM test, give the product training, give the platform training, and ensure that the number of the people who are going to market for these mutual fund products across Tier 2 cities and Tier 3 cities go up. So this is the second important thing that we have done. The third, of course, you are aware, the usual mutual fund IEI, the media campaign that we do in order to increase the awareness. But more importantly, we are focusing now by adopting states. We have adopted 4 states, wherein we have entered into tie-up with some marquee institutions like IIM Visakhapatnam, IIM Bodh Gaya, IIM Shillong, and XIMB in Bhubaneswar, where they are going to train the trainers, and then they train the students, bring investor awareness over there, And indirectly, while we make the people understand, get the financial literacy, they in turn will take their informed calls and invest into various other schemes.
Right. Okay.
Sir, while you've spoken about all these factors or points that you have taken into action over a period of time, B-30 cities increasing as well. How do you view the rise of fintech apps offering, SIPs and mutual fund platforms as well? What is that, and how does that also fit into the role of increasing this penetration?
Fintechs are helping us. They are a very important integral part of our entire ecosystem. They are the ones, you want to do your KYC, onboarding of a customer. They make life so easy when you want to onboard a customer. Second important thing is, once you onboard them, then they would like to have an informed decision. The Gen Z, the youngsters, would like to see on the screen which one is giving a better returns, which schemes are good, which is good for my goals which I set up for myself. So they are providing enough information on a click of a mouse. So onboarding is made easy, getting information is becoming easier, and once you have an informed decision, investing, that is made also easier by making a click of a mouse. So these fintechs are helping us in increasing the penetration for the informed investors.
Taking this point forward, because you said it's making investing easy, that also means that people are going ahead and investing on their own. So that means direct plans now account for roughly 45% of the industry AUM. Is it something which is worrying you? Because investors in this case are not going for expert advice anymore. They are thinking DIY investing is the way to go. Is this okay, or is this something that you think is a worrisome sign?
No, Sunal, you have a very valid point. See, but again, when you talked about 45%, Sunal, there's the important thing that we need to look at is there are two types of investors that I have. The same point that I talked about when you asked me about B-30. You have individual and non-individual. There again, I need to break up and see, because the non-individual, it is the corporates who are investing, they don't need any distributors. So if I remove them, then this 45% that you're talking about will become a smaller percentage with the overall AUM that we're looking at. But having said that, today, as we speak now, I have 5.8 crore investors. And you would have seen the recent survey which has been made by SEBI, which again talks about that 63% are aware of the securities. In that, again, they talked about mutual funds, where 53% are aware. But the number of households that are investing into the mutual fund space is around 6.7 or 7%. So there is a wide gap between the people who are aware and people who are investing. And therefore, the pie is big. I need both hybrid model, both the digitalization, the do-it-yourself customers, where Gen Z who are informed investors who do it. At the same time, there are millions of investors who need hand-holding and where distributors play a vital role. So it's going to be a hybrid model. It's not either or, has to be both.
Not either or, but it has to be both. But sir, we are reaching closer to that 100 lakh crore AUM, What are the factors maybe that could lead to the growth from here on? And could we expect this figure in the first half of calendar year 26?
No, we are also looking towards that. But one thing that I would like to bring to your kind notice and to our satisfaction is a SIP. The consistent contribution to the SIP, there is a constant growth there. It demonstrates the discipline of the investors. They are not looking at short-term volatility in the market. That's point number one. Point number two, the growth story of the country is intact. Even today, we have seen IMF coming out with a report talking about the growth story they have increased the growth GDP of the country. So the growth story is intact. And the markets, I hope that the markets will continue to do a favor, and there will be an attraction of FIs to come back. With all these factors, the disciplined investments, the growth story of the country, and the FIs coming back into this particular space, And there are good number of tailwinds. Of course, there are a couple of headwinds that are always there, but good number of tailwinds are there. All these are going to support the market, and the number that you said is very likely to come in the first half of this current calendar year.
That will be a big milestone for the Indian mutual fund industry as well, right? And this is at a time when we are talking about more distribution going in, more participation coming in across the investor value chain. Very interesting insights, but we have to get into a quick commercial break. When we come back, we'll also focus on the mutual fund industry's key expectations from the upcoming budget. There's a lot to talk about more, so stay tuned for that conversation.
Welcome back to MF Corner on CNBC TV 18. We still have with us Venkat Chalasni, Chief Executive at Amphi, as well as now joining us is Rajshri Sabnavis, Senior Advisor, Tax Regulator and Consulting Ecosystems at Grant Thornton Advisors. And now we're going to be discussing the expectations that one should have, or the mutual fund industry has from the budget this time. Rajshri, good afternoon, and let me start this conversation with you. Now, equity mutual funds are one of the most tax-efficient long-term products for retail investors. In this budget, what specific tax stability guarantees are you expecting from the government this time?
Thank you. Good afternoon. And I think one of the major asks would be to bring the debt mutual funds on par with the equity funds as well, because that's been a long-standing ask, at least for the past more than a year now, especially where if government is looking to strengthen the bond market, I think it will be good if they could take a relook of that. So either they increase the basic exemption from 125 to 2 lakh, which is available for listed securities, or at least look at reintroducing the indexation benefit.
That I think I would like to go to Mr. Chalasni for that, because, you know, since the time the debt taxation overall has been introduced, the general idea for this space has changed drastically. Have you made those representations to the government regarding bringing back the older taxation, or at least make some changes which makes this particular asset class more attractive?
Yes, Kunal, the most important thing, again, I agree with my friend who has just spoken. If you look at the way in which the markets have developed from 2019 onwards, the equity market space has grown phenomenally. But in respect to the fixed income, it remains static at the same level that it was there. What it was in 2019, we have the same level today. That's because this particular space has not become attractive from the point of the taxation, from the benefit of the taxes. See, and second important thing is today, the corporate bond market, there is a need for liquidity in the corporate bond market. And there is also need to make the retailization of the corporate bonds and enable the investors to diversify, not just into various other asset classes, and one of the most important asset class being the fixed income. So taking all these factors into consideration, we have again made a request for giving the long-term capital gains in respect of this fixed income. Two, we've also brought out the indexation benefit, which was there earlier. We requested that it has to be restored now. It enables, as I said earlier, it enables the markets to develop in the corporate bond space. Otherwise, it is totally focused towards an equity space as we speak now.
Absolutely, you know, that is some important points that you have made there as well, sir. You know, Rajshri, should long-term SIP investors actually get higher tax incentives than lump sum investors, maybe to encourage more of a disciplined investing, where we as a country want to increase the focus of everyone on investing, increase mutual fund industry growth as well, penetration there? Do you think this is something that is required?
See, I mean, as an investor, if we were to ask, then I would ask for everything, right? Like I would say my entire income bucket should be tax-free. So it'll be hard to make a distinction between an SIP and, you know, extending a benefit only for an SIP mode of investment vis-a-vis a lump sum investment. I would, in fact, you know, move the needle a little bit and say that as an investor, you know, when we look at, so the ask would be, instead of looking at SIP versus lump sum, let's look at if an investor is probably liquidating one particular fund and moving that money into another mutual fund, you know, all under the same AMC umbrella. Why not look at exempting that? So today there is a capital gains tax payable, but maybe that's something you may want to relook at, because what it does is it maintains the money still remains within the mutual fund setup itself. So I would, rather than the SIP versus lump sum, I would actually look at neutralizing this movement from, or what we say is swapping from one fund to another. All the same AMC umbrella, asset class, basically.
Absolutely, and that has been a talking point for a long time. If the money is moving from mutual fund to the other mutual fund, it's the same asset class, why do you have to pay capital gains tax for just switching your units from one particular asset class to the other, or one scheme to the other for that matter? Mr. Chalasni, what's your take on this? As Rajshri mentioned, you can't really differentiate between SIP versus lump sum. At the end of the day, the investors putting in money, they'll get returns. If not this, what are the other ways to incentivize an investor to put in money into equities or ensure that at least the returns are not taxed heavily?
I agree with this particular view. In fact, we are agnostic to the way in which you're investing. It has to be scheme specific tax incentives rather than amount that is being invested. So that it has to be tenor based incentive and scheme based incentive rather than looking at the amount, number of times that is being invested, whether it is in the form of lump sum or SIP. So I'm fully with that view. And second important thing is we have made a similar pitch asking about that whenever these switches are being made, the long-term should not attract long-term capital gains, because for the simple reason that the entire amount that is going to be reinvested, they will have to pay the tax for whatever gains that have been made. In fact, in any case, they're going to pay at the end of the tenor. So that again, that request has been made along with our various other requests that are put forth in this particular budget.
Mm-hmm. Rajshri, there was an ask that came in to get a debt-linked incentive saving scheme, right? Like the equity one. Can we safely say that may not come, since we are talking about now the new tax regime having lower rates? What are your thoughts here?
So again, here I would say that the government has taken a step forward in terms of making it a little bit more simpler from a tax regime standpoint, right? So moving to the new tax system, i.e. do away with all exemptions, let's do away with all litigations, let's do away with disagreements, difference of opinion, etc. So if we were to stick on that path, I would say rather than introducing a debt-linked saving scheme or a deduction for that, why not look at making mutual fund contribution, bring that on par with national pension scheme? So today there is a benefit that is available to every taxpayer for any contribution that goes towards the NPS. Can we widen that net to include even the mutual funds contributions as well? So I would rather, again, move the needle to and point it more towards this aspect.
Take that point, Rajshri. Mr. Chalasni, we are very short on time, almost just like a minute left. Can you quickly tell us if you agree with it, or the debt-linked savings scheme is still a priority?
We did request, as I said, one of the important aspects that as we speak now is to develop the corporate bond market, is to develop the fixed income market. There is total concentration on one particular segment, so we need to ensure that it expands. So DLSS is one of the points that we did request. At the same time, we also had made a request saying that people who are going to invest into infrastructure bonds, if a scheme mutual fund is going to invest into these infrastructure bonds, again, the concession or tax benefit should be given. That's something that, again, we are looking for.
Okay. Thank you so much, Mr. Chalasni and Rajshri, for joining us today and taking us through your budget expectations and for the mutual fund industry overview as well. With that, we'll do one thing. We'll take your leave on this edition of MF Corner. But stay tuned for more market action, closing bell to take you through the last hour of trade.